there's concepts. This is day 5. KJ Cash. We're gonna talk about order blocks and liquidity. And in the spirit of order blocks and liquidity, I wanted to show you guys this article because this is an older article. I got this when I was on a call with Dr. Spills, one of the kings of order blocks, and he was showing us how manipulated this market is, and that's really the point. So, nearly 100 million paid out by Paribas, Goldman Sachs 130 million to combine for 890 million. They listed the other banks ahead, and that's JP Morgan, Chase, Citicorp, Royal Bank of Scotland, UBS, and Bank of America. Why are they paying nearly $6 billion in fines by US and British regulators? Because they rigged the foreign exchange market. They all pleaded guilty. And this is just a time they got caught. And I just wanted to show us this so that we can keep in mind what we're trading, who we're trading with and against in these markets, because we want to be trading with these people. Another thing that I was just looking up was JP Morgan trading. And here, I just Googled it, and JP Morgan FX algos, are you an institutional or professional client? This is their algorithms, right? Right here, JP Morgan can help optimize your cross-border and financial foreign exchange payments through our global banking expertise. Let us trade your shit. JP Morgan's foreign exchange commodity rates trading platform as a leading liquidity provider. You look. So this is what we're working with and against. So then the question becomes, how can we start to how do we see a bank has gotten in the market, and then how do we react to what's happened? That's very, very valid question. And so that's what we're talking about today. And then how can we use this information to take some trades, right? So one thing that I want to just mention is a bullish engulfing candle is one of engulfing candles in general are key leading indications on what's about to happen next. And that's because that's a footprint. So what happens is when you get a doji, let me just try to find it right. I want to go back to this old one. I mean, we can just keep going back and running into more and going back and running into more, but I just got to pick a partner stop. That's why I was where I was at. So when you get a doji, what happens is the next candle is going to tell us if that's indecision, basically. It's buyers and sellers in the market. And so the very next candle, if you get a bullish engulfing, that doji is then looked at as an order block. Or another way to do it is the last bearish candle before the bullish push. Okay, the last bearish candle before the bullish push, which most of the time is a doji, but the dojis are considered engulfing candles or ECs, which is my indication of getting into the trade when you get the NC. However, this is the actual last bearish candle before the whole bullish push. So you can see this bearish candle, and they call it like a sell to buy. And what happens is big institutions have a lot of money in these markets, and it takes at least 10,000 standard lots to move the market 1 pip. So when they decide to when they're going to get into a buy, for one, even if this was the best buy position, this gray line you see right here, that's where I'm looking. So like this right here, we was like, okay, it's time to buy. It's time to buy. Price might be getting ready to shoot up. We got a bullish engulfing. Let's get in. Well, if this is where I'm looking to buy, you got to think. If you could get access to a pair of Jordans, right, for $350, and then all of a sudden you knew that if you were to, manipulate the market, you can get those same pair of Jordans for an actual $150 instead of $350, and then price would still go back up to regular. You do what you can, right, to get it at that lower price. So what happens is they flood the market, right, with sells. They're already in for the buy. So what you see is, and let me try to zoom out to see if we can actually see it on this particular situation. So what happens is, right here is a much better example, right? So they know they're looking for buys. The initial buy pushes the market up, but to get sued, you would get sued for manipulation. The market can't just move in a straight line. There's a lot of rules. How many pips can you move per day? They got to mitigate their positions. So what happens is, while this buy order is open, they have to open a sell order, right? And that sell order brings down price back down. And while that sell order is open, we got to think that buy order is now negative. And so what happens is, they just bring the market to mitigate price. So sell it down, buy it back up, bring it back down, exit all the sells, and then you got an explosion where price just sort of takes off to the next level wherever they decide to TP. And then the thing is, as it reverses, it's going to leave us more footprint. So we're just going to look at how to take some trades with this, with order blocks, looking at targets, entries, and exits. And I guess I'll go over the concept of fair value gaps as well, because fair value gaps helps us see momentum. And what is a fair value gap? Now, originally and regularly, what you'll see is that candles, generally speaking, in regular market trading conditions, they just trade into each other. There's not a lot of space between the wicks. Now, once an institution gets involved, what you'll notice is price gets pushed so hard that the space between the wicks, it leaves a large gap. And that's why this one is purple, because it was an order block and a fair value gap stacked on top of each other. So the space between the wick of the last candle, we got the push, and then the next candle. So the top of this wick and the bottom of this wick is considered a gap. And price, generally speaking, has to trade back into that gap to fill this gap in order for it to continue down into motion. And so what we look for is order blocks and fair value gaps in the market so that we can continue. Of course, we already know pivots in DLO, but now we're just talking about ways to see for some pending orders, targets, entries, and exits. So if we were here, what we got is a gap on top of price, an old order block that has been mitigated, but it's here. We got a non-mitigated order block here. And then an order block down here with the previous daily low. So I just want to watch price action play out, and then we're going to look for some trades. So the main thing, oh, yes, that's what we got. So we got price came, literally mitigated the fair value gap. It didn't completely close the gap, but it did mitigate it, meaning price traded into the gap. And then you see what happened. I mean, it literally melted, and now we're headed, it was one candle, yes, tore through this order block, which, you know, as we can see, it's not, this one is much stronger based on how it's stacked, right? Melted through that one, came to hit this one's fast ass, fat ass candle. I'm gonna have to slow these candles down. But and let me delete this. Let me go back. I added something, but it's cool. I'm not tripping. We just go rock with it. So then let's just see price trading in and out of these order blocks. Right? Now it's smacked. Damn, I don't see my other I don't see my other thing. I don't see my other order blocks. I'm missing something. Where are my order blocks at? Let me fix this. There we go. We back with it. So here, let's just talk about it as we go. Obviously, this was an institutional candle. Doji, major engulfing. So this right here with this order block up here is already telling us, you know, this is a key level. Stops are up here, entries are here. Now let's just watch price play out. And we're looking for price to trade into this order block from that one. And I really want to come back and show you that, but it's going to hit it. And then we want to see what happens after we hit it. Now, in the midst of this one coming down, we got a second one created. We want to see that. So we got a second order block here. Price is now trading into this one here. It has not fully traded into it. Keep that in mind. It comes back up to retest this one. My mouse so actually see we got gaps being created. And if you want me to pause it, if you have any questions, we'll just wait. We got some consolidation inside the order block, which could be looked at as distribution. Ultimately comes down with high volume, producing another rejection block, order block. What's the difference in rejection block and order block? I'm just going to talk about it really quick. The candle, the space in between the body and the top of the wick is going to be the rejection block, while the whole body of the opposite pushing candle. I got to figure out a better way to say that. But if you're looking at a bearish order block, then the body of the whole bullish candle is the order block. If you're looking at a bullish engulfing candle, then the body of the last bearish candle before the bullish push is an order block. Now, these got mitigated quickly, so these aren't institutional pushes. They're already mitigated, but you can tell price did have a reaction off of them each time. So this was created, price came up into that one, sold down into this one, right here. Now we finally hit this order block. It came back up into this one again. And the one that was, from this order block here, it came back right into it. And now let's see, as it rejects that order block, what kind of drops we get. And then where does it finally reverse from? And then we have targets already based on the footprints that the institutions left behind on this bearish push. And that's the whole point is that I'm trying to get at, is that they leave these footprints behind. So as you see, it came up, collected enough energy to come down into this one. And now let's see what happens. Let's see, we're at 38.66. We should get some big ass drops. Now, in the midst of this, just like with pivots, just like with DELO, now I'm looking at it on the 1 hour, you can get a lot more confluence by finding multiple time frames that line up together. So we would want to see a 4 hour, a daily, and so right now we're approaching a nice 4 hour order block right here. We want it to be coming off of the daily. And I can look at this and tell that this was the daily order block. And down here was the second one. And look, bearish, bullish push, bearish, then the push that shot it all the way up. So we are in, right? An daily order block. It can potentially come down to this one, but price is giving us a reaction. We go back down to the 1 hour. This is pretty good. And we're going to see price trade. We see that these are mitigated order blocks because of dark gray, right? And I'm going to hit play, even though not everything is loaded up. It's all good. We're just going to hit play because I really want to see price trading. And I just want us to see it bounce. And then we're going to talk about doing some pending orders. Here we go. Boom. So now look at this. Let me zoom in so we can really see. Because price literally finally came, bounced on this order block here, gave us a retest, gave us a bullish engulfing candle. Now, let's see if it holds. Let's see if this order block holds. Yes. And we got some, damn, it's moving too fast for me to even say anything. Okay, let me just rewind this. So what we got, and I think this is key to note, and I've heard this on multiple boot camps, but when price retests the immediate order block and then explodes towards the next one, I would be looking, so you look for buys after the retest, if that makes sense. So you look for the trade after it's been retested. So this was the order block being created. It got retested, dropped. So you could have taken the risky entry here with the stops here. Of course, we have other ways to look at it. But this retest, and they call this a pick and roll on some other things. Once you see that engulfing candle, you can wait for that retest. Make sure price doesn't close above the body of the candle. Get in, stops above the order block. You're going to take your TP at the next order block below. Okay, just so that we can get that clear. Now that we said that, same thing. First, we see the price trade into the order block. So we're going to get now if we had a limit here and a stop loss here, you would have been activated. And the way to know that that was the one to pick would just be to look all the way left to see which one, where can you find the most confluence? We're just not going to do that in this very second. But I want to talk about how to catch this buy that's about to happen. So you see price comes into the order block again. This is an order block down here. And then it rejects to create a new unmitigated order block and a fair value gap. Now we know that gaps need to be traded in. So initially, yes, we could have had limits here. This was entry one, was to have the limit under the order block and the stop loss here. And I'm going to add liquidity to what we're talking about in a second, because we'll talk about what liquidity is and how we can use that in addition to what we're doing in order to add to get what we want, right? But we need price to either mitigate this fair value gap or this order block and not push all the way through for us to take our real entry, because we know we're on a downtrend. So if this is going to be a reversal, this order block is going to have to stand, like it's going to have to hold, right? So we wait to see what happens. And this is where it takes patience. And lo and behold, the fair value gap gets traded into, the order block gets mitigated. It comes back down into this one, right? And we're going to talk about, and this was actually a liquidity grab from these retail traders with their stops here. Liquidity grab, bullish engulfing out of the order block. Now that's major too. That's something that I want to talk about. We need a bullish or bearish engulfing out of an order block. This is the order block. This was the bearish engulfing out of the order block. This is the order block. Price tested, liquidity was grabbed. Ooh, I think we might need to get into liquidity right now. Boom, bullish engulfing out of the order block. What is liquidity? If there is nothing good on Google, I will just draw it up, because this is something that I've started to fall in love with. Forex, I don't even think it is, because this is not something that's like, they don't want people trading liquidity. Here we go. Here's a nice little picture. I really just want to show you guys a nice picture, and then I'm going to show you how we're going to take advantage. I'm just going to show you guys. Let's do it. Let's do it. Let's do it. So liquidity is, so when the banks, when institutions get in with their big ass trades, what you'll find is traders like me and you, we are also looking to get in the market. There's a whole lot of us that are trading these markets. And so there is money being stacked up. There's orders being stacked. Now, the way that I look at these orders is unfilled wicks. What do I mean by that? The top of every impulsive move, there's going to be a wick. And at the top of that is where that impulsive move's stop losses are. If that makes any sense. So every time we get into a trade, we want to protect our capital. We don't want our money, whether it be hundreds, thousands, hundreds of thousands, millions, however much you're trading with, you don't want the market to take all of that at once. So you got to put a stop loss. Well, the banks work the same way. They also need stop losses and things of that nature to protect their capital. So every time you see a pivot or a reversal, there is potential liquidity left uncollected. And what happens is, if you mix together order blocks, fair value gaps, and liquidity, you will find yourself finding perfect entries, because it's like, well, price is going to have to trade into this. And then you'll ask yourself, well, is it time for entry yet? And what's going to happen is you'll recognize it's not time for entry yet. Now, I just need this to pop up one more time. There we go. Let's get it. So we can see our order blocks at the bottom, which is also our previous daily and monthly low. Now, when I'm looking at this, and I just talked about liquidity and orders being stacked. Now, on our charts, guys, we have arrows so that we can see liquidity. And once those arrows get collected, they stop moving. So the arrows that are immediately under and above prices under is uncollected liquidity. So we got uncollected liquidity here, here, here. It just came from this push, right? That's new liquidity that was grabbed here. So even if we were to go back just a little bit, which I feel like it's important, because you're going to notice, and I want to let price, let's just start here, right? because we got a mitigated order block and a bullish engulfing candle. So we could be thinking it's time to buy. So let's see. In my opinion, we will want to see what happens after price collects this liquidity. If we can get a break and close above this, price could potentially keep pushing up into this order block. But if we get into this rejection block and can't even collect this, if we reject here or reject here, come back, we're going to come down and collect more before we can go up to collect more, which tells me we're going to either need our sell stops here, our sell limits here, our buy stops here, or our sell stops here. Potential buy limit if price respects this liquidity. So if we get a grab and then a push up, we're looking at TP here. But if we get a rejection and a push down, we're looking at this as a TP1, this as a TP2, this potentially as a TP3, but this would be like an ultimate TP because we got an order block and liquidity inside the order block. So we could potentially even have a buy limit here and our stop loss under this liquidity. So if price mitigates this order block, grabs liquidity and reverses, we are in the trade and our stops is hidden way under. Now, what is this liquidity? That's from way back to the left. That's this candle. So just so you can see what it looks like on the left, if you were to scroll left, I don't want you to think I'm just literally just taking arrows. No, that's left from these candles, right? So we zoom all the way back in. Now then we see we got unmitigated order blocks way down here too. So these are actually looking like targets because this order block along the way has been mitigated. This is just liquidity. Oh, it's just an old order block. It's just showing us something that's there. So let's see what happens, right? Price trades up and it doesn't even, there we go. Let me get in there. Let me zoom in so we can really see, bro. So price trades up. Damn, I went too fast. We was right here. Price traded up. It did not even get into the order block. Like it literally can't, it didn't get into the rejection block. Price retested this order block and melted, right? But we know that there's uncollected liquidity here. So if I'm really going to get into a sell, I low-key would have wanted to see this liquidity get collected first, which it never really did. Right there. It got collected. Boom. This is the potential reversal. So this was the liquidity collection that I was looking for the sell. Like I said, it had never gotten collected at first. It finally came up, mitigated these order blocks, collected liquidity. In the process, though, we see price came down into this order block once, tapped, created equal lows in an order block, and uncollected liquidity here. So this is my targets here and here from this grab. That's what we need to happen. And that's why, honestly, I was not looking for the buys here because, like I said, we needed liquidity to be collected here, which you could have said, okay, I'm going to get in for this buy for that collection. It's up to you how you want to play it. For me, I'm looking for the large swings. So I'm looking for price to mitigate something kind of crazy. Maybe come into this order block, grab this, and then finally head up into this one. But if I'm looking for these targets, I understand nothing has really been collected yet. What do I mean? From here, what do I mean? And I'm hoping this is making sense. But from this candle, yes, we did collect liquidity from this order block. We would need the bullish candle now to push up through this level and through this level. So it's really actually a collection. But if we keep getting bearish candles and then it tries to come up from here, I'm not getting confidence that this is going to be enough energy to get into these order blocks. It's not coming from an order block. It's just a collection. This is just price action trading until we get into an order block and head back to an order block. That's what I'm getting at. So we need to get in this order block and collect to get into this one or this one, but not necessarily in the middle, like not middle of the island trading. That's what I'm getting at. We want to go from end zone to end zone. So as we see price action, yes, it tapped, but it didn't really collect nothing. If anything, I'm recognizing that this is leaving liquidity behind. Now, this massive bullish push would have definitely given you buy vibes. At which point, once price retested here on this candle, I'm gonna pause it. Once we get that retest and that grab, notice this was liquidity that got grabbed. Once this candle turns around, my target is this because we grabbed liquidity, we're turning around, honestly. Now, I just want to see what's going to happen here. And after we grab it, like I said, we got to see if floors get respected or if price just decides to head off. And then that's where we can take our next trades. Boom, we're just going to see, even though we've been watching the same replay over and over, we got an order block created. Price comes up, grabs liquidity, leaves some behind, creates an order block, trades into our order block, trades into the bottom one, and this is where we want to see what's up. And this is what I've been talking about the whole time. The liquidity inside the order block finally got collected, right? Now we just wait to see if it's respected, wait to see what we get, and we have potential targets already. And not only is it potential targets, you can look at how less confusing this is now. Now we're not in the middle of the ocean. Now we have an order block with liquidity, a fair value gap. Like we have some clear action on top of it. So we can say, boom, TP1, TP2, TP3, TP4, so on and so forth. It may get here in reverse, but we know it's not. We know what we're looking at now. We just got the grab. See what happens as price action plays out. Bullish engulfing, boom. TP1 smacked, right? Price trades up into the fair value gap, mitigates fair value gap. Comes back down, collects all the liquidity, retests order block. You might be seeing a big melt out of this mitigated fair value gap. Yeah. TP1 smacked and price reversed out of the order block. Now we got another one. Keep in mind, this liquidity had gotten grabbed. Damn, it's just moving so fast, guys. Oh my goodness. Run it back. All right. Price trades into this fair value gap. It mitigates the fair value gap without actually closing this order block. So we're seeing that this is now looking like a major institution. It mitigates this, comes crashing back into the next order block, leaving one behind. I just had to let it play out so we could actually see it, but mitigates fair value gap, leaves behind some liquidity. Liquidity gets grabbed right here. And this is what we wait for. We wait for a liquidity grab for our entries. I cannot express that enough. I cannot express that enough. Like, if we can wait for the liquidity grab, it'll stop us from getting stopped out so much because it's like, okay, price came up, grabbed it. Now we're looking at the reversal. And then we can look down here for our next, we got an order block established. We're trading zone to zone. This one was respected. Yes, we know it will eventually get hit, but this was the target that got hit. We see it's reversing out of our fair value gap. Now, let's see, 7 minutes. In about 2 more minutes, we're gonna end the video. But I just want us to watch the video trade through a little bit more. Watch price react. Price comes into this. It never fully came in. There it is. Smack through that shit. It's going to come up, collect a little more liquidity, come back down, continue raining. And we're going to get more indications on which direction it's going as we go. We're not going to just look at this to trade, but as we see, it's leaving equal highs behind, creating levels, and then breaking levels. Come back up. We need this liquidity grab for the next drop. Look, oh, it can't even get that more simple. Not only did it give us a liquidity grab, what was you going to say something?
No, I just saw how it played out.
Exactly. And it even came in to retest this order block. So if you were looking at it live, and of course, this was a crazy ass candle. And this is news. Get that. This is news. So if we're looking at price here, and we just see the liquidity in the order blocks, we know this needs to be collected, this needs to be collected, and so do these. We know that needs to happen eventually. What's crazy is it happens all in one candle. One candle does all of it. It comes down, collects liquidity. It came up, collected, came down, collected, came up, retested, melted, basically. And that's intense. So if you had limits based on these, all TPs should have got smacked. And this is news. Like it pushed up into the order block. And I was waiting on that to pop up. So it pushed up into the order block. It didn't completely, it did. It completely filled the fair value gap. Finally, which was the gap that had gotten mitigated earlier. It completely filled the gap, melted down all the way to the liquidity. Now it didn't even go past it. So that's, I'm just trying to show you guys, like, this is, the thing that I like about this is that it's not a guess. This is where the market went. It went to collect the liquidity from way back to the left. It comes back up here, closes, and then melts. And it's like, where does it melt? Minimum to this order block. Minimum. From order block to order block. Now, even if you just got in when it tested this one, like I'm going to TP here, boom. Your TP was smacked on this one candle. And that's what I just keep saying. One, and this is news that we're talking about. This is news. Watch the very next candle. Price is going to open here and it just melts into the order block. One candle, TP smack right into the next order block. And now we just wait for price action. We got some liquidity. We need a grab and a respect before we really get into the buy. Honestly, I want to see this liquidity get grabbed and I want to see it get respected. Outside of that, I'm just going to wait. So it got grabbed. Let me get a bullish push. If there's no bullish push, there's no action. All this liquidity, I wasn't looking for that buy. Look at how it built up. Now maybe, but no. And you see, we got another order block. You see how you see that. So it's like, wow, like, man, there's so much to talk about in these moves right here. Liquidity got grabbed, but we did not get the bullish engulfing. We did not get the order block. Instead, we actually got a bearish engulfing and an order block for the continuation of the sell. We got, and we would have seen it here. Boom, a rejection block and a retest of that, and then it melts. So if we were looking for the buys on this liquidity right here, we didn't get it. Then we got the retest of this order block. So creates it, retests, creates it. This is the order block that was created, right? That's the order block. 3 minutes. That is the order, because this is the buy before the sell. This is where probably retailers were like, I'm going to sell. Then those institutions like, let me get it at a little bit better price than them, right? My bearish. This is the order block. It gets retested, melt. Liquidity was collected, retested the order block, mitigated the order block. Now we're coming to collect, baby. We got all of that liquidity underpriced, an order block overpriced. Where do you think we're headed? Right here, you can just ask yourself, we got liquidity underpriced. We got an order block with liquidity overpriced. You know what I mean? Do I think it's going to reverse and come into this order block, or are we just going to go ahead and collect with these unmitigated order blocks? We're just going to go ahead and collect. And you can pick one based on looking left and other indications and decide where you think it's going to stop. So after this next drop, I'm going to go ahead and stop the video so we can get into some. I'm going to stop the video. So let's just watch it come on down into these to collect. Of course, it retested this order block. And now it's coming to collect this money from all those past orders. All the way into this. I think it's going to collect this one too, honestly. Like leaving this behind. This is after this price action. If I'm looking for a buy, I want to see this one. I would probably put my limit here because this is the hidden liquidity. This is where I feel like the banks, this is where retailers want to buy. This is where the bank will want to buy. So I'm being patient, and this is the limit. I'm putting my stop either, we'll get into that later. You see we're creating, and if this just gets ran through, then it gets ran through. And if price just runs up, we missed it. but I really don't think it's gonna run up because this is not being collected. It came too close. Look, it actually melted through it. Let's see if we get the respect. I don't think it's gonna respect it. I think it's gonna keep melting. And that's the value of patience. And you see it, it even came into the order block. So it's like there is no in the middle of the ocean trading anymore. Honestly, you want to look for your limits. And I'm going to say this at the end of the video. You got to the sauce. You want your limits and your orders with the banks in the order blocks. You want your targets with the order blocks. If it's not an order block, you don't want to be trying to get up in the limit, put limits in between the gaps, in between liquidity. Like there's no reason to have a sell limit, buy limit here or here or here when you have clear indications of what's happening. Now we finally got the collection. I'm not going to keep playing it. I think this is a great area to stop the video. Day 5, this was order blocks and liquidity and how the market trades in and out of them.